Income Tax 2020, Practice Problem 1, Part 5. We're going to do data input, this time into a tax formula into an Excel worksheet related to Form 1099 DIV, 1099 Dividend, and Form 1099 INT, 1099 Interest. Come in, relax with Income Tax 2020. Here we are in our Lacerte Tax software. You don't need the Lacerte Tax software to follow along. However, I do think they have a 30-day free trial, so if you can get access to a promo or demo version of it, it might be a good tool to practice with. We're going to be focusing in on the tax formula in our Excel worksheet this time. So if you have access to this worksheet, you can follow along with it. If not, then you can just see how we can put this data input in terms of a tax formula as well as put it into the actual tax forms and see how we can do that in two separate locations in a tax practice to give us kind of a double check to see that we didn't make any data input errors. That's going to be one of our major objectives. Also note that it is possible to put together a worksheet like this fairly easily if you choose to do that as well. So I'm going to go back on over to the first page. Now, in the prior presentations, what we have done is taken our information. So we took our information that we might get, say, from a client or our own information. We then set it up in terms of PDF files. We've opened up all the PDF files over in our Adobe Reader, and then we started to input this into the system. Now, normally I would input all the information into the tax software system, into the forms in other words, and then do it separately into basically Excel. But because we want to see each piece at a time, we're going to input every piece into the tax software and then to Excel as we go. Just the goal here meaning that we're going to take the information directly from the data forms each time. So in other words, in prior presentations, we had entered the data for the W-2s as well as now the 1099 DIVs and 1099 interest into the tax software, populating our information in the tax software. We're going to do the same thing into our Excel worksheet. In prior presentations, we have input so far the W-2 information, not yet the 1099 information. That's what we will be adding to this time. So in prior presentations, we added these two W-2 items, adding up to $80,000 up top. Now we're going to be adding to that income line item, this time with the interest items and dividend income items. Now, just to note here, in terms of the 1040, the dividends, some of this information is broken out on the first page of the 1040. And that's a little bit different than the format that you would have with the tax formula, where we just have this one line item here. So that the 1040 is kind of mirroring what you would think of with a tax formula, but even the first page of the 1040 is a little bit more expansive. In other words, you would think the 1040 might be just mirroring what we have in the Excel worksheet with the tax formula, and then we have a separate worksheet for everything else that feeds into the first page of the 1040. That's kind of what we have with the 1040, but some of the information you can see is going to be broken out on the 1040, especially with related to the income information. So it's a slight different in format that you might see going from one to the other. And that's why the formula is going to be easier to visualize in a lot of ways, because you're going to group everything in your mind if you're trying to visualize what would happen into basically the income line item when you're trying to think about what the net impact would be on, say, taxable income as well as taxes of any kind of change that might happen. Okay, so now we're going to go to our data forms, starting with the interest. So we got the interest income. I'm going to enter this into our income tax formula. So I'm going to go back on over to our software. We're going to be in line 1 still, and I'm going to break all that stuff out into another form. So this is going to be the income worksheet. So I got down here the interest income, and so I'm going to call this is from Bank 1, let's say, Bank 1 interest income. And this was for the amount of the 670. So 670, pretty straightforward there. And then if I go back on over, we have some tax exempt interest, and you'll recall that that was input as 150 on the first page of the 1040, but it's not going to have an impact on the tax calculation. So here I'm not going to include it in our form on this side. Now note, you might just want to like note it down. You could, it depends on what you want to do with your worksheet. You might note down that say you had some tax exempt interest, just to double check that, but I'm not going to include it because it's not going to have an impact on the tax equation here. This 670 isn't going to add into that 80,000, and so down at the bottom we're now at the 80,670. Going to the first page, there's the first line item pulling over for the 80,670. Next item, I'm going to go back on over and say, okay, so let's do the next one. So we got that one. Now I'm going to go to this one. This is bank number 2. I'm going to be pulling the interest income over here. Also note that I'm not really taking into consideration whether it's coming from which spouse it's coming from over here. That could have an impact, and we are putting that in play when we're thinking about entering into the data in the tax return. But I'm not going to put that in play as thoroughly in the tax calculation software over here. And again, you might want to emphasize that more, but the things that are going to be dependent on say, whether the income is going to be applied to one spouse or the other, I'm going to be a little bit more dependent on the tax software to help us out with that calculation, such as, do they qualify for putting money into an IRA contribution or something like that? Typically, the software will be helpful for that. So I'm not going to put a whole lot of detail in the Excel worksheet related to that, but again, you could if you would like to. So then we're going to be in the second one. This is going to be for the interest. So this is going to be interest for the 670. We're on the second one now, the 710. So bank 2, 710. So I'm going to go over here and say, all right, bank 2 interest. So bank 2, 710. And now that adds up to the total interest of the 1380, 80 plus the 80,000 here for our W-2 income adds up to the 81,380, which is pulling over then to the first page of the 81,380. So that's what we have thus far. So that looks good. That's all we have for bank 2. So let's go on to the dividends. So here's the dividends for E-Trade. So we have the ordinary dividends, qualified dividends, and then we have this capital gain distribution. So I'm going to say, all right, that gain distribution kind of messes us up a bit. They're all going to be in this top line item again for income. So I'm going to go back on over to the income item here. I'm going to go to dividends, and this is for E-Trade. I'll just say E-Trade, and I'm going to then say that we have the dividends of the 1,000. Now, notice we have 1,000 of the ordinary, and then of those 1,000, 800 are qualified. I'm just going to put 1,000 here because that 1,000 is what I want to pull over to income on the income line item. And then I'm going to depend on the system to calculate the qualified dividends, meaning I'm depending on the tax software Lacert to break out that calculation for the qualified dividends. So I'm just going to include all the dividends in the income line item because that's what's going to be included basically in this top line item here. So in other words, if you look at the tax return, we have the dividends over here in 3B, and then of those, 1,300 are qualified. This qualified dividends is going to help us to do the tax calculation, but this 1,750 is what's going to be down on the taxable income included and get us down here to the taxable income. So that's the number that I need over here, that 1,750, which we should get to once we do the 2 dividend forms. Okay, so then I'm going to go back on over. We also had on the dividend form, what else did we have? We had, so that's going to be this one. We had then the qualified dividend, and then we had this capital gain. Now that one's a little bit funny. If I go back on over here, we're going to go, well, where does that go? And that I'm going to put on the Schedule D over here. That's where the capital gains typically will go when we sell stuff. So this is the weird thing that we had basically a capital gain distribution. And so I'm going to put it like down here. This is going to be a long-term cap gain distribution. And that was for 300. So I'm going to say, all right, 300 here. And that's going to pull over to my capital gains. This form too, Schedule D, is pulling over to the first page of our worksheet. So it should be included in that 82,680. Now, again, if you look at the tax forms, it's going to be down here, and that will affect the tax calculation as well because it might have a different tax rate. I'm not going to calculate the different tax rate on our Excel worksheet because I'm really just verifying the taxable income, then going to depend on the tax software to do the tax calculation. Okay, so that's what we have thus far. So that is included there. Now we'll do the second one here. So now we're on the second dividend income. So that's 750 and 500 from Vanguard. So I'm going to go, all right, Vanguard income. We're at dividend income from Vanguard. And that's going to be the amount of, what's the amount? the 750, and then of those 500 are qualified. So once again, I'm going to go back on over and say we want the 750. I'm going to bring up all of them, and then I'm not going to note the 500 are qualified. You could, but it's not going to make a change to the taxable income. So basically, we got that 1,750. That kind of matches the tax return here, 1,750. That's the amount that's going to be including in the taxable income. So I'm going to say, okay, there's the 1,750, 1,380 for the interest, and the 80,000 for the W-2 income, adding up to the 83,130. That 83,130 plus the Schedule D of the 300 is going to give us then our first page here, or should, at the 83,430. So we're at the 83,430 now. If I match that out to what we have here, that matches out to here, 83,430. So that looks good. And again, I'm kind of not checking. I'm not really checking this number or this number, and I'm not trying to figure out the difference in the tax rates for the 300 and the 1,300, which are going to be on different tax rates than ordinary income, capital gain rates, and qualified dividend rates. So then I'm going to say, all right, and so that adds up to that, and then we got the 24,000 standard deduction. We're not itemizing at that point. Gives us the taxable income of the 58,630. Now this number, then the actual tax, I'm going to depend on the software. So then if I was done with this now, I would actually check the software to help me calculate the tax. So this 58,630 should tie into the 58,630 there. That looks good. Once done, then I'm going to say, okay, I'm depending on you software to calculate the tax, and that's going to calculate it at it's calculating at the 6,448 at this point. Now that calculation is complex because again, now we got 3 different progressive tax systems that are in play here. We've got the 1,300 that could be a separate tax rate for the qualified dividends, and the 300, which could be subject to the capital gains rates, and then the rest of it being at the ordinary income tax rate. So you can go through the worksheet here if you'd like to kind of verify it, but I'm not going to double check it completely. I'm not going to recalculate it every time in our Excel worksheet. Again, if you want to do a complex formula to do that, it's possible. You can do it. You can do a formula to set that up. We're not going to do it here. So I'm going to go 6,448. So 6,448. And then we know that the 8,000 was on the W-2s that we entered in a prior presentation. Those payments we're getting from the source document W-2s. That brings us to a refund of 1,552. And if I go back on over here, does that match? We got the refund 1,552. So I entered all the income on the first page from the source document, checked that out, then took the tax from the tax return into our Excel worksheet, and then I took the 8,000 bottom part from the source documents to then recalculate the 1,552 and the 1,552 kind of matching up, and that's how we could kind of double check this. So again, I jumped back and forth to the tax software to show you the differences there, but I would do these as separately as possible so that we do the data input separate from the source document, and then do the tax returns separate from the source documents, and then we reconcile the two to see if there's any data input problems or any other questions that could come up in that process.